Yeah, the banking crisis is far from over. In fact, it really just began a year ago or whatever. We haven't heard of many failures of late, but most are insolvent. If they had to take their long bond portfolio and market to market and take a 30% hit, 40%, whatever it may be, they're basically insolvent. All banks are really insolvent from the aspect of the fractional reserve banking system. I mean, and that's legal and lawful, and that's the way it's been for a long, long time. But if you only have to have a 10% reserve, which really it's not that high, but let's say for every $100, there's only 10 on reserves, but the depositors have 100 at the bank. So if all depositors come back and say, "Hey, I want my $100," and the bank says, "Well, wait a minute, we only have 10." I mean, they all got out of business overnight. So there's that aspect of it. I'm not forecasting it. I'm just reiterating how the fractional reserve system works and why it's so unstable at times. But the problem now is that banks need the deposits to function. They need the liquidity. What's liquidity? That's cash here and now. It's cash on the table. And it's been contracted in two ways: the increase in interest rates we just discussed, and because of the increase in interest rates, money that was sitting in the bank, earning next to nothing, has now gone into the money markets. And the money markets are composed of paper, corporate paper, corporate bonds, and loans, bankers' acceptances, treasury bills, bonds, whatever. So it's basically a bunch of assets, securities that are trusted to be very liquid, that will provide a yield of, 4 something percent. And so people are moving their money out of banks. So now the banks are becoming less liquid with a balance sheet that's really bad. And it's pretty easy to conclude that the banking crisis isn't over. The problem with the banking system at large, and it's true globally, is they're all interconnected. And that's what happened in 2008, when they let Lehman and Bear go. They kind of had to put a halt to it because those dominoes, two had hit. If they didn't stop it, then it would have gone to 4, 8, 16, 32, because it is an exponential function. And they stopped it in time. Will they do it this next time? I don't know. They've already reneged on their promise. The promise was that it's illegal to do a bailout, and only do a bail-in. But when Silicon Valley Bank failed and all the billionaire class had moved their money out of there, a great many of them, the people that were left were bailed out by the banking system. So you can't even trust them at their word, which I seldom do, if ever. But so it's a convoluted mess. It's not over. The best thing you can do is keep your balance under 250,000. Even at that, you're not assured that the FDIC will have the capital to bail, to make your account whole. You are an unsecured creditor at the bank. The deposit that you put your money into becomes their money, and you're just a creditor to the bank. You've actually made a loan to them. So, not trying to scare anybody. I've said this many, many times.
Sure. Well, let me ask you then, what do you see? What are some of the potential next shoes to drop then in the banking sector? If it's, as for all means, by all means, it looks to be insolvent currently.
Well, you'll see the bigger banks gobble up the smaller banks. You'll see, well, we've already witnessed the trend will continue. How many regional banks have closed? I mean, I put a video out on my Twitter. I think it was in New York or New Jersey, and all these banks that are gone. They just basically closed the doors and locked them. And that's happening all over. ATM machines are being shut down or taken out. So there's a huge contraction in the banking system, just like this matching the contraction in the physical economy. So you're having less access to cash and less access to banks, and that will continue. What the grand scheme is to consolidate the banks to a very few, and then to put the central bank digital currency into the hands of the Wall Street banks, not necessarily in the hands of the Treasury, so that the Federal Reserve can remain independent and say, well, we're just an independent agency. It's really not our job to issue the money. That's the Treasury's job. We just print it and loan it, or the Treasury prints it, but it's owned by the Federal Reserve. It's a Federal Reserve note. And that gets put into circulation. So we'll provide that service, but the digital banking sector will be run by JP Morgan, Wells Fargo, Bank of America, and XYZ. All their banks are now uh, uh, null and void at the end of October 1st, 2025. That's just a scenario. I'm not predicting that, but I'll give you a yes what the trend is. That's
Yeah, no, I totally get it. I guess my next question really would be, or just the point is, it seems like a lot of the world already has this. I mean, if you look at Canada or most of Europe, I mean, they have one or two banks per country, or maybe a little bit more, but it's not more than a handful, if you would. My next question is, and I'm already seeing it when I just go to the grocery store. It's like I can't pay with cash. Um, I- Talk about that. Work that out. Is that part of the whole going into digital currency, a government, a new currency, a digital currency?
yeah, it is. There's a direct correlation, at least from my studies, that having anonymity with your finance is paramount to freedom. It's nobody's business if I go to a garage sale and buy a used cowboy hat or whatever. Why should it be? And if I want to pay with it for cash and the other party accepts it, well, why not? But the bankers hate that. And so they are moving toward a cashless system. That's been in the plans. Of course, you will hear them deny it. And I have a rule that I forget I picked up from one of the newsletter writers I used to read. And he stated that once the government denies something 3 times, it's a certainty it will happen. So Christine Lagarde said that, don't worry about the digital euro. We'll still have cash. So that's number one that I'm aware of. It may be number two, maybe number three. I've heard her say it once, and they won't do it overnight. It won't be, it could have the digital euro and cash, but then they'll slowly phase it out. And then you could have cash, but if you can't use it, what good is it? It's as if it doesn't exist anyway. So you've got, your 100 euro notes, your 500 euro notes, and you're walking down the street. Now, a private party might take them. But as far as, let's say, any merchant on the street, no, we don't take cash. You got to use your digital currency. So there's several ways to block it out. And as I said, maybe a small thing, but part of the equation, and that is, ATM machines being taken out. So it's a control. It's to be able to track, trace, and tax every transaction you do, even the ones at a garage sale or a flea market, that you have no way out. And of course, there's always a way out. There's always a free market, often called by authorities a black market, but it would be bartering for silver, bartering for something that you want to exchange. I don't know what, some piece of junk jewelry for the cowboy hat, whatever. I mean, those exchanges are always going to be made, but not on the aggregate, not in the whole. It can't be implemented. That's why money becomes such a valuable idea, because it's stored labor, and everybody purportedly would have an equal chance to store their labor. Of course, that's not true under the system we have, but nonetheless, the idea is that you can save for the future and have a pretty good idea of what that's going to purchase in the future. And of course, that starts to go away, as we've discussed, once inflation really takes off.